Study the past if you would divine the future. Confucius said that 2,500 years ago. That has been our motto since our founding here at Charting Wealth. Why don't we study the past? Because we can see signs, we can see patterns, we can see things that emerge from how stocks, ETFs, commodities have responded on these charts in the past and how they might respond in the future. The biggest thing we look for always are our weekly vertical crossovers on the 4 charts that we cover for you on a daily basis. This is the comprehensive review and forecast we do once a week at the close of the market on Friday. And we're going to review what happened over the course of this last week, where we are in these markets, and where things may go over the course of the next week based upon what we see in our charts and based upon the movements that we've seen, where all of these things are in relationship to our price percent oscillator, our derivative oscillator, our Bollinger Bands, our Heikin Ashi candlesticks, the things that we cover. I have been really harping on this lately, my friends, and that is, remember, the charts actually tell you what's going on. The news is many times make-believe to keep you fascinated and mystified, to watch commercials so they can sell you things. Because remember, the quote news is what comes between the commercials. We're commercial free, except occasionally I ask you to buy the book or be a Patreon supporter. But let's jump into these charts and talk about what's really going on. What do we see happening? Weekly chart, we ended the week up 0.68% for the day on Friday. How did we end the week as far as the weekly candle goes? We say our Heikin Ashi candlestick is a nice green up candle, hitting higher than it had the prior week. Derivative oscillators gained just a little bit of momentum. Price percent oscillator still heading up quite nicely on the S&P 500. Now, don't forget, where did the market top off before? At about 290, 291. Where are we now? 188, almost 189. So again, are we going to have a double top here? And what will happen then? Well, we'll pay attention to these charts and see what we see. Remember, we're still in negative territory as far as the price percent oscillator on the quarterly chart. 2 prior quarters have been red spinning tops, means indecision tending down, and we'll see if we hit a summer low as we perhaps top out again. We'll just continue to watch. We'll let the charts lead us. We're not going to hype things up and be predictive. We're going to be trend followers. That's what we do best here. So let's go ahead and make sure that we continue to keep up with our trend lines. Let's look at the 2-day chart at this point. We see the derivative oscillator continuing to gain upward momentum, and we see the first day of the latest 2-day candle, a nice big green up candle. Price percent oscillators pulling away from the red signal line. Prices above the 2-day and well above the weekly trend line, so things are looking okay. What about that 4-hour chart? Hasn't crossed over yet. The pullback's still underway. We'll see how things move on Monday. Are they going to bounce off the red signal line and go down? Or are we going to have a crossover Monday morning, giving you the potential to jump in? Now, you might say, well, if we're about to top out at 290, 291, why would I jump in right now if things might top out and then plummet? That's a good question. You might keep asking yourself that. But again, remember, we're practice trading, so figure out whether that's going to make sense. Let me hear from you. See what you think and what you practice. And again, trade worksheets are available for free in the show notes. You can find those, they're PDFs. They're in the show notes every day. Those of you who are subscribed to our email service, you can sure find them there. If you want to also look at the website, chartingwealth.com, they're posted every day under the Daily Review. You can also find them at the YouTube channel under the Daily Review. We have the PDF to the show notes posted there. And again, that's for the weekly market worksheet, daily market worksheet, and all important trade worksheet. Let's go from the S&P 500. So be watching for a crossover and a potential jumping in point as we start the new week, or perhaps things will top out and start heading down. We will see. Let's look at the Qs, up nicely for the day, 0.43%. And of course, we have a nice, decent up candle moving a little bit higher than it had topped out over the prior week. Derivative oscillator moving up, price percent oscillator moving up quite nicely on that weekly chart. We go to the 2-day chart. What do we see there? Things are they've been a little flat for a while, but they continue to sort of edge up. First day of the latest 2-day candle. What do we see going on there? Price movement just barely above the 2-day trend line. And again, if we move it up a little closer in time, it doesn't matter what we do with it. We are still nudging on, just barely moving over. So you can see the slowing down in price movement. And like we said, still moving up. First day of the latest 2-day trend. That'll end on Monday, of course. And or the latest 2-day candle. We'll see how that finishes off. What are we doing as far as the 4-hour chart goes? Well, it's in negative territory on the price percent oscillator. But as we've told you, what do you look at? You go to, after you jump into a trade, that 2-day and the weekly. And of course, things are still moving up, still in negative territory. Derivative oscillators lost some downward momentum. Price percent oscillators still heading down. But again, still trying to push up on the Qs, but pay attention to the 2-day and the weekly. At some point, these things are going to top out. And again, when we look back at the Qs and where things topped out before there, you can see somewhere around the 187 mark. And again, we ended at 185.63. So pay close attention. Again, we're going to have a double top here. Just watch and wait. And again, we've made a nice profit so far in this run-up since we had the crossover on that 4-hour chart with the jumping in point on Monday afternoon, the 1st of April. Things have moved up quite nicely for us, somewhere around the 181 or so mark, up to where we finished the high on the day on Friday, 185.85. Not bad price movement for you. So again, just continue to watch, and if you've already decided to pull that trade, that's fine. You made a decent profit. If you're going to continue in that, pay attention. Watch these charts as we start hitting that previous high. Okay, we're now going to leave stocks, and we're going to go to bonds. Down for the day, 0.71%. We have a red down candle, bit of a wick on top. So it's not the strongest of down candles where you just have a solid red down candle with just a wick on the bottom. But so we are showing some price pressure pushing up, but we have the price percent oscillator heading down, hasn't crossed over yet, so still in a confirmed up move as far as the way we call that on the weekly chart. Derivative oscillator still also positive. We go to the 2-day, and of course that crossed over on the 2-day chart ending Thursday. We do have a strong red down candle for Friday, pushing through the weekly trend line and heading down. So again, don't have a trade in bonds right now. The 2-day is down, the weekly is up. We go from the 2-day to the 4-hour, and you can see huge movement down in the morning with more movement down in the afternoon. 2 days of down movement, pretty strong down movement in bonds. So we'll wait to see how things, and again, that's what one would expect if stocks are going to previous highs at this point. You would expect bonds to be moving down. Why? Because typically stocks are a place where money goes when the market's doing well. When it's not, money moves over to bonds. So that would make you think that what's happening is happening. That's in keeping with regular things. When bonds and stocks are going up at the same time, that can give you some pause for concern, because what is going on? This is pretty much reasonable for what we would expect to see occurring. So we'll wait for bonds to sort themselves out before we have any kind of trade over the next few days. Lastly, we go to gold. Now remember, had a weekly vertical crossover at the end of the week on Friday the 29th of March. The week after that, we had a nice strong down week with our Heiken Ashi candlesticks as far as average movement. And we still have the price percent oscillator going down at roughly the same angle. Derivative oscillator going into its 5th week, finished its 5th week of growing down momentum. How did we end the week up? Well, we had some up movement in gold, some down movement in gold. We ended with pretty much a green doji, which means indecision tending up. That's what the Heikin Ashi average pace candlestick movement typically means. And again, we will continue to watch and see what we see with gold. As we go from the weekly chart to the 2-day, this is what we've been talking about so much, and it is the 200 period moving average line, which has been several times now, 3 times now. It has been a floor on gold. Gold goes down to about the 121 mark and then bounces off. Gold is currently 121.97 is, again, what we're showing with our Heikin Ashi candlestick, somewhere along those lines as to where gold's movement was. I'm actually showing 121.83. Again, the Heikin Ashi is, those of you who understand Heikin Ashi candlesticks know that it is calculated differently than your typical candlestick. You want to know more about Heikin Ashi and why we use them? We have a great training at the website under Heikin Ashi candlesticks, HEIKEN-ASHI. It means average pace in Japanese. You can find our training both at the website chartingwealth.com and at YouTube. It's been watched about 110,000 times or something. I think it's the #1 training video on Heikin Ashi candlesticks. I encourage you to listen to it. I will attach it as a video at the end of this for those who are watching the video. If you're listening on iTunes, again, you can find it at the website chartingwealth.com under trainings, and it is Heikin Ashi candlesticks calculated differently. We find it extremely helpful. And of course, what we see on the 2-day chart is the first day of this latest 2-day candle is a decently strong red down candle. Derivative oscillators about flat. Price percent oscillators still heading down. What we're really looking for is to see if gold is going to penetrate that 121 level. If it does, you may see gold continuing to plummet down, may just bounce off of it again. We go to the 2-day chart, from the 2-day to the 4-hour. And again, we've got 2 days of down movement, but again, bouncing off, not really wanting to move much even below the 122 mark. So we'll watch, see what we see. We had a crossover on that 4-hour chart going down in the morning. And I know some of you pulled the trigger there to do a practice trade on gold, hoping that we're going to see it move down and penetrate the 121 mark. We'll see if it does that. Again, now that we know there is a floor there, be careful if it bounces off of it again. It does not hurt to do a practice trade. And again, learn what you can learn from jumping into those trigger points. But again, pay attention when you find hard bottoms. That is a place of resistance, a floor where the price finds it hard to penetrate. And we'll just watch as the week starts and see if gold's able to penetrate that and head down. That means, of course, one would be in the market to short gold on a practice trade. That is either buy puts or look to get into an inverse gold fund for practice. Folks, that's where we are as we end the day. If you've not purchased our book, hey, how do you do that? You follow the link in the show notes. It will take you right to the place where you can purchase our book. We are in our 9th printing at this point, and we have a copy for you autographed and ready to go out. If you live overseas, not in the United States, you cannot buy the book at the link that's there in the show notes, but you can buy it this way. If you'll email me, cw@chartingwealth.com. That's C as in charting, W as in wealth, cw@chartingwealth.com. Email us, tell us that you want to purchase the book and where you live. We will send you a PayPal invoice to your email address. Pay that. We'll get your book in the mail to you. Folks, we appreciate your help, your support. You want to really support us, you can be a Patreon supporter. All sorts of great stuff for you. For all our Patreon supporters, you get everyone, no matter what your level of Patreon support is, at the lowest level, and we have 3 levels, the intermediate, and the most advanced level, any of those three, we let you join us for a monthly question and answer Q&A. We also review the stocks and ETFs you're interested in, that intermediate level and above, of course. We give you a 15-minute telephone call every month to check on you, see how you're doing, answer any questions you might have to help you with your training. You also get all sorts of great free training, including our Bitcoin chart, our exclusive chart for Bitcoin, along with the training on that, the quarterly training and that chart, and of course, you get our short chart training, which people really enjoy. Folks, that's where we are. As we end the week, we so appreciate you being with us. 10 minutes a day is all we ask. God bless you, my friends. All the best from the whole team here at Charting Wealth World Headquarters.